You might fail, but along the line, you will see that your analysis will begin to come in line with whatever is going to happen. Now, let me explain this. I have an indicator here. This is RSI divergence, which I just wanted to use this as, you can use RSI in place of this. This one here is MACD or MACD, like I would always call it. And this is the chart. Now, I'm going to explain a strategy, and I'm going to be, it is, of course, the SMC, smart money concept that we all use or we all know. Now, in terms of trend identification, which is the structure of what has happened here, this is 15 minutes candlestick time frame, by the way. If you look closely, you would see how the market has reacted, and this is where we currently are at. Now, would you say this is bullish or bearish? Because that is where the trick lies. If we want to trade in accordance to the direction of the market or the trend of the market, would you say this is bullish or bearish? Of course, this is a bullish momentum. This very green candlestick is a very bullish momentum. And when something like this happens, you're looking for a retracement that would continue the bullish movement. And many a times, this is what we expect. It has gone up here. It should come back down, you know, and continue going back up. You can even measure from where the candlestick started from. Okay, it has gone this high. Let it come to the half of it. Just like using Fibonacci retracement tool. It should come back to the half or discount level, premium zone. What's it called? It should come back towards this side. Then we'll get an entry. Now, it did not stop around here, if you look closely. Rather, the market dumped. It came here, went up, and still came back down to take out this region. Follow me closely. Yeah, it has grabbed this liquidity, not just this safe, even this previous one, because it went below it, so it has grabbed all of them there. Now it is going up. Are we then going to say we are bullish and begin to buy, knowing fully well that we don't buy high when price is already high? We don't buy, and we don't sell low when price is already low. Okay, after grabbing this liquidity, this would have been a good entry, but we were not online. Let's say we didn't see it. Now it is up here. Are we going to jump into conclusion that it is a buy and rush into it? No, because this is now a lower low, which is an indication of a bearish move, and the markets could possibly grab this as a liquidity inducement, internal liquidity, whatever you call it. Stop loss now becomes this place. I know trading the binary options market, there's nothing like stop loss, you know, but then if this were to be futures trading, my entry will be here, and this would be the exit for SL. When it comes back down, here, we are going to be in profits. Now, how do we implement this in options markets? We have taken this place out. Looks like we are not going to take this place out because the market is reacting. MACD is showing green candles, 4 of them, which is depicting volume. RSI is very close to the 70% region, which is overpriced, right? Now, we would go to lower time frames, like 1 minute, okay, and look for a sign and an entry. What is the sign? The market, the price reaching a zone where we expect it to drop, then a 1 minute candlestick drops, then the next one would go back up. Let me illustrate what I mean. So from here, we went here, and the market came down. This is a sign. Now, what is the entry? If it comes back up, then it will now come down. Never forget that the market would always give you a sign and an entry. RSI on 1 minute has gone below 70%. That is a sign. An entry means let it go back up. MACD has crossed below the signal line. That is a sign. What is the entry? Let's it push back up a bit. You might see a very beautiful setup, but your entry will be late or will be wrong. That being said, we just got an entry. If you look closely, we just got that entry. Now I can go to my expert option trading interface. I have done all this confirmation, so there's no need for me to redo it here. And I would calibrate my deal duration to 3 minutes, 1 minute, 5 minutes, depending on how long I want to stay in this market. But for the sake of this video, let's do 1 minute. And I will go into a sell. I think it is already dumping itself even before I do that. I have just entered a sell for 1 minute with $50. And in 1 minute, this market should dump. Let's see what is happening on TradingView. Can you see that? Never forget that the market would always give you a sign and then give you an entry. It is left for you to understand the sign or be able to identify it. Then get a good entry. Your entry is as important as your deal duration. Because if you use 1 minute for this trade and somebody else uses 3 minutes, of course, you know that the probability of this market dumping in 1 minute is lower than that of it dumping in 3 minutes. So you also need to always calculate your deal duration. It's not like anytime you want to do binary options, you just put any. No. Deal duration is part of the analysis. So there are trades you would lose in 1 minute, but you would win it in 2 minutes or 3. So you still need to look closely and be able to discern. I think I want this trade. Right? Yes, I want this trade. And be able to discern what would be you calculate how long this is going to take. It is very, very important. If you have forgotten all the things I have said, don't forget this one. The market would always give you a sign and then give you an entry. Many a times when we get this sign, we assume it is an entry and we begin to go that direction. No. A sign is a sign. An entry is a better or a high probability point for the trade. Exactly how I speculated it. Can you now see that trading is a skill? And you need to express this skill with maturity and with precision. Don't forget to like this video and subscribe to this channel if you want to learn more about strategies that would help you make money on the binary option space.